Hi there, Delroy from Easter here. I thought I'd do something different this time. The budget was on Wednesday, we're now on Friday, this is Friday, and I thought I would sort of go through the budget and see how it affects tradespeople like me and whoever's watching this. So I've got an expert here, which is Barry Sexton, who's been my accountant since I think 2005, something
That's
like
right,
that.
Delroy, yeah.
So Barry, take it over. Tell us about yourself, how you got into your accounting things, and we'll take it from there.
Okay, thanks for having me on, firstly.
Yeah, no
Delroy.
problem.
Well, my interest in accountancy was sparked really at school by a teacher, a commerce teacher, who was very good. He's quite an entertaining guy, so you know, he was able to make it interesting. And I remember on one occasion a representative from one of the professional accountancy bodies came out to the school to give a talk, and he also showed a short movie, and in the movie there was a guy, you know, dressed in a nice Crombie coat, flashy suit, briefcase, and you know, a copy of the Financial Times stuffed under his arm, and he's driving a Jaguar. And I thought, yeah, this looks good.
It would, wouldn't it?
Yeah, of course. It looks, you know, that looks really good to any sort of 14, 15-year-old, doesn't it?
Yeah.
And anyhow, well, on a serious note, really, I sort of like dealing with people, helping them, you know, find solutions to their problems. And I knew there was something unique about accountancy, and that's sort of, you know, if you want to do that, and that has sort of proved right, because financial statements tell a story, don't they, whether they're good or bad. And I really enjoy helping people interpret that and use that information to move their goals forward, basically.
So what about education wise? Did you have to get degrees or anything like that, or you just
No, there was two. When I started, I think you can still do it this way too, I believe. So you could either do an apprenticeship. That's just sort of, you know, going into an accountant's office after school and doing a 5 years training period, and you do exams every year, and eventually, you know, you qualify as an accountant, and or you can go to university first and then enter a training contract. It's a bit shorter, but you know, and it's the same result in the end. So I took the route into the accountant's office from school.
Apprentice.
Yeah, I needed the money basically.
That's a good way
Straight
to do
away.
it anyway, I think.
There was no point. Yeah, so that was the choice I made at the time. And,
One thing,
suited me. Yeah,
I've got a friend who's an accountant. I think he's sort of retired now, though. But he was good at maths. Most accountants are good at maths, aren't they?
Contrary to popular belief, you do not have to be really good at maths to be an accountant.
I always thought you had to be.
No, I mean, obviously you need to have some knowledge of numbers, but it can
Add up and subtract.
Yeah, it can be pretty basic, to be honest. Percentages. The thing about accountancy is putting things in the right place.
Okay, right.
Yeah.
So Barry, when it comes to a budget, I don't really take that much notice of it, to be honest.
Yeah.
But one thing I know, it's always about tax. That is usually the main gripe with it.
Sure, yeah, absolutely.
And, so can we go through this class 2 and class 4 stamp payments, what that's all about?
Sure, yeah. Class 2 and class 4 national insurance contributions are the contributions that self-employed sole traders make into the to the Treasury, basically towards their pension, the state pension. The rates on those were reduced. Class 2 contributions were abolished completely, and class 4 contributions have been reduced from 9% to 6%. That actual reduction was promised last year, but they've just confirmed that will now go ahead. So if you're a self-employed sole trader, anything above 12,570 of your profits would be taxed at 6%, up to 50,000.
Okay.
Above 50,000, it's 2%. That's the class 4 contributions. We no longer have to worry about class 2. That was only an annual contribution of £150 anyway.
Right.
So it's probably not a huge reduction, but of course it's something.
So with the class 4 now, you're saying the up to 12,000 or something. After that,
you can have profits up to 12,570.
After
They're
that,
exempt.
whatever you earn, they tax you at 6%.
Yes.
Okay. All right. So that's what that's all about.
Yeah.
Okay.
Yeah.
What's this thing about digital?
Making tax digital. That is a major change in the tax system. So instead of paying tax twice a year, we will now have to pay it 4 times a year and file a tax return quarterly. And to file the tax return, you will need a digital accounting system. You can no longer file paper or using the government website to file your tax return. You'll actually have to have a digital accounting system such as QuickBooks, Sage, Xero, Free Agent. Either one of those. There are others out there, some cheap ones as well, but they're all do the same thing basically. So you need to have that and to enable you to file your quarterly tax returns.
So how I do it with you guys is like, if I'm doing an invoice, I've got 2 ways. I do my invoice using the Square system or the QuickBooks system, and then as I get my invoices, like if I get it from one of my, like CEF, they send it to me by email, and I upload it to Apron.
Yes.
And then if I get, say, like a invoice from anywhere else, I just take a picture of it on my phone and upload it to Apron. That's what you were saying, that type of thing.
That is the digital accounting system, so you're already compliant.
Right. So those invoices also linked to the can easily be linked to the QuickBooks.
Yeah, so the QuickBooks is a sort of complete accounting system. You can download all the bank transactions and apply them to each individual expense account. You can also upload your invoices to the system, and it will automatically post them where they should go. Once you sort of put the right coding in place, it automatically does that for you. So it's very good. It'll speed things up very quickly for people.
I'll get that now, because she doesn't do it that much now, but every now and then me and Vicky used to get on the phone and I had to change something in QuickBooks so she can download from the accounts to make everything. So you've got your invoices going into Apron, which is linked to to QuickBooks, and then your bank account, it links QuickBooks. So everything is digitally linked.
Everything is digitally linked, and you can raise your sales invoices there as well if you want to, or you can have another package which does that and link it into it. Right.
And so at the end of whenever the time comes, your tax returns and everything's there to be sent.
Absolutely, and it's all done in automatic, and it's very good. Not just for the tax purposes, but for running your business.
Yes, it is good.
It really is essential, to be honest, because it's giving you, live information, isn't it?
And before you said it used to be twice a year.
Because you'd pay in January and July, wouldn't you?
Oh.
Generally, you'd pay at the end of each tax year. You'd pay the balance of what you owed, what's shown on your tax return. Plus, you'd have to make a payment on account for the following tax year in July.
Right.
So that's changing.
But now you have to do it every quarter.
Every quarter, yeah. So it'll be March, June, September.
Is that detrimental to us as self-employed people?
Well, it's going to make things harder, isn't it? Cash flow wise, etc. You're going to have, for a lot of people, they're going to have to keep more accurate records, because they will need them to file their quarterly.
And this is where
return.
The digital comes.
This is where the digital system comes in.
Because that would be more accurate.
Yeah, but it's a good thing for businesses generally.
Yeah.
But obviously, the government are going to get their money quicker, aren't they?
Yeah.
So from that point of view, you have to sort of weigh that up. But
yeah. Okay. So we've got that part. Okay. With the 2% and the 4% that you explained earlier, is that to do with the tax threshold?
The tax threshold, you can earn £12,570. That's the basic tax-free allowance for everybody, and that applies to the national insurance and the income tax as well.
So all right. So if you're earning, if you say you're turning over £100,000 a year, only 12,000 of that they allow you without tax.
Yeah, exactly. I mean, we live in a high tax country.
But really. we're taxed in
everything we do. Every time we walk into a shop, every time you open your wallet, basically.
That's like the Sheriff of Nottingham.
Well, it is really. Yeah.
That's like the Sheriff.
It's, always trying to get their hands deeper into your pockets.
That's why Robin Hood developed this thing. Okay.
Yeah.
There's something else. All right, now this is the part that I've heard this all over the internet. This stealth tax. What's
Stealth
that
tax.
about?
I'm quite sure the government do that because they know people don't really understand it, you know, because the personal allowances are 12,570.
Yeah.
Everybody gets that. But generally speaking, they would increase that annually to take account of inflation, you know, so, and they've done that year, you know, every year to date, basically, until now, you know, and they've decided to freeze those rates until...
Oh, sorry, that
Sure, yeah.
Sorry, I got a little bit lost there. So, this, what are they doing? They're doing something sneaky that a lot of people don't know about.
Well, it's not that it's sneaky, they've said it straight out, but I'm not sure a lot of people will understand the effect of it.
Right.
Because if they're freezing your personal allowances at 12,570 for 6 years, and your income is going up, they're going to get more tax, aren't they? Because they're not raising that with the rate
so
of
they're
inflation.
not raising it as it goes along.
Exactly. So as prices are increasing and wages are increasing, they're getting more. They're getting more tax effectively.
Right. So, because really, that should be going incrementally.
It should be going up to keep account of inflation.
Yeah, keep up with inflation and yeah.
So it's a sort of not a stealth tax, really, a sneaky tax.
Right. So they're keeping it there.
Yeah.
And not giving you nothing extra.
Correct.
So it's not bringing it up, so you'll get your tax. You're getting more free.
Correct. I mean, effectively, it's clawing back any benefit they're giving, really, isn't it, on the reduced national insurance contributions? So it's in what, you know, it's in one pocket now. You know, we're in one hand and out with the other. So.
I think since I've been, well, I don't really, like I said, I'm not that versed on the budgets, but over the years, it's always like you gain on the swings, lose on the roundabouts, or you rob Peter to pay Paul. Like they take tax from there, and they say they're giving you something there. It's something like that.
Well, I mean, you know, it's basic economics to, you know, that you should really try and keep taxes low, you know, so people are incentivized to you know, earn more money, basically, grow their businesses, and then they get more tax that way.
So right now,
that's the basic economics. Everybody, you know, anyone who studied, you know, basic economics would understand that. But that tends to be the difference between Labour and Conservative government, really.
So I think I'm a bit more clear on that now, because if you go back a few years, that amount that they allow you tax-free used to be 10,000, and then they brought up to 12, but now they've frozen that. Then they're not bringing it up any higher, and inflation's going up, prices are going up, but you're still frozen at that level.
So effectively, in real terms, they're getting more tax on national insurance over time.
I get that.
But the Conservatives actually brought that in, even though they're giving out stink about the budget. It was them that actually brought it in. The Labour Party just extended it.
Right. Okay.
So it's an interesting one.
Just sorry to a little summary. The things that in the budget that affects us as self-employed people and who employ people, because you were saying something about when you employ people and all that.
Yeah, sure. Yes. If you employ someone, you've got to pay employers national insurance contributions in addition to their salary, which is a cost, and that has now been raised to 15% of the salary, so it's quite significant. And so that will be an additional cost when you're considering, you know, employing somebody. But they do give you a credit of 10,500 against that under certain circumstances if you're a small company. So depending on the number of employees you have, you can set that 10,500 off against your employer's national insurance liability. So that's a help, but it won't apply to everybody.
Right, because the government, in my eyes, to keep unemployment low, they should be encouraging people to employ, shouldn't they?
Well, exactly. That was all the trouble last year, if you remember, in the last budget, when, you know, companies were, you know, saying they would have to lay off lots of people when they increased the national insurance rate, an employer's national insurance rate, significantly. Yeah, it's a big issue.
So with you having to pay 15% towards the national insurance, right? So, and the government gives you that 10 grand, did you say?
Yes, they give you 10,000 credit
What,
against
for
it.
each employee or?
No, just
or-
against your payroll.
So,
yeah.
right,
But
against,
but if you're a small company
Yeah.
with maybe 3 or 4 employees, that that's a good credit.
that's
isn't
good,
it?
yeah?
Yeah.
Oh, okay. So it's helpful,
It is helpful for smaller businesses.
yeah, depending on the size and how many you employ.
Yeah,
How
sure.
many people you employ.
Exactly.
Okay. All right. So, all right, mate. I'm a bit clearer on that. There's something you're saying to me, but I wanted to explain this. This AI thing where the government can take money from your bank account just like without your permission.
Yes, they have got a new system now, AI system, which enables them to look into your bank account when they want, and also to take tax from it under certain circumstances. Now, there has to be some. There are strict rules surrounding it, and they say that it won't be used unless they are aware of serious tax evasion, basically, and people who are deliberately not paying their tax are holding on to it, which is a problem. There's a lot of people out there who don't pay their tax and they leave it a very long time.
So are they going to use AI to figure out that you're not paying tax? How do they know you're not paying tax?
These are people who have filed tax returns, so they know there's a tax liability,
Right.
but they're not paying it when they should pay it, and they're dragging it out for years in some circumstances. So they now have the power to dip into the bank account to take those funds, basically. And they've said it'll only be used in those circumstances. But they also have that particular AI system can also look into the bank account basically whenever they want.
They can look into your bank account
Yes.
whenever they want.
Yes.
What would they be looking for?
They'll be looking for receipts, unexplained receipts. So if you filed a tax return showing income of 20,000 and there's 30,000 in your bank account, they'll want to know where you got the other 10.
Right.
That sort of stuff. That's why. I was going to talk a little bit about it later, but that's why it's very important to keep your business and personal transactions separate.
Yeah.
So there's no unexplained amounts going into
They
it.
can't look into your private account.
I'm not sure about that yet. I haven't seen that. But
So is
they
this
would have the ability to do it, but whether they have the legal authority to do that at the moment, I'm not sure.
is this widely known by people?
Yeah,
I never knew about it.
Yeah, it doesn't seem to be, but yet it was announced last July. I think it's been available to
I
them
wonder
since then.
if they've actually used it yet.
I'd say they have, Del Roy. Yeah, in
Yeah,
certain
you say they have,
circumstances. Yeah.
So they'll think, okay, that company over there, they look at your tax returns, I suppose, and think that don't look right. Let's look into their bank account.
Yes. And see is there anything in there that might.
But they haven't declared or something like that. It doesn't match up with what the figures they've got.
Yeah. I mean, generally, when we're filing tax returns for our clients and we find something that doesn't look right, but there's a genuine explanation for it, such as loss of business, or bad debt.
Yeah.
We would generally advise clients just to put a short note in the tax return explaining that, so the inspector can see and say, okay, that's fine, and move on to the next tax return. It becomes the next guy's problem, doesn't it? So yeah, that's what we would do in those circumstances. But yeah, I mean, they have the power to do these things now, so that's why good record keeping and the use of a digital accounting system is now becoming very important.
And Big Brother, that is the ultimate Big Brother, isn't it? If they can go into your bank account and take money out.
I was quite shocked initially when I saw it, but there doesn't seem to have been any uproar over it,
Right.
which you would think there would be.
I don't think a lot of people. Well, I didn't know about it. I don't.
Yeah.
Maybe a lot of people don't know.
No,
about
I'm quite sure they don't. I'm quite sure that's right.
Right. Oh my God. Okay. So, in summing up, Barry, how would you sum up the budget and with pertaining to tradespeople like ourselves, like myself?
Yeah. Well, my summary of it is there's not a lot in it really.
Right.
There's some help with reduced national insurance, but that's been clawed back over time with the stealth taxes we've talked about. And to be perfectly honest with you, I can't really think of anything, good for tradespeople in it, except we'll all have to pay slightly more tax.
Well, that's not good.
No. So, though I suppose we can manage it, but still, So yeah. Okay,
well, that's fine, Barry, because because you hear these people and they're all banging on about the same thing, talking about the budget, and I'm not sure whether this budget is that different to budgets in the past, you know.
No, I mean, yeah, but I suppose it's stability, and people get confidence from that.
And we're in funny times now.
We're in very.
But you know
times.
that the important part, if people didn't know, is that digital thing to get that on.
To get that right, yeah. I mean, that's one piece of advice coming out of the whole thing that you know, I would definitely highlight, to get yourself a good digital accounting system. Keep your proper records, keep all your receipts, and use it regularly. Update it monthly at least.
Okay, cool. We've done that. Okay, nice one, Barry. Thanks for coming, and thanks for hopefully the viewers have got something from it. Let us know with your comments and that. Thanks.
Okay, thanks so much.
Get Barry from sorry, that's your old company, BJ Sexton.
It's Barry from ABVK Limited, and you can get us, you can have a look at our website, or you can phone us on 020-8532-9205. How about that?
Top accountants are getting, you're the M25 Business Centre.
M25 Business Centre. We're based in Waltham Abbey, but we have clients all over the country, really.
Okay,
because today, you know, you can service anybody with the technology.
Yeah, that's the good thing about it.
That's the good thing about it, absolutely. Yeah.
All right, nice one, Barry. Thanks for coming on, and hopefully the viewers have enjoyed it and picked up something from it.
Yeah, and thanks again for having me.
No problem. Nice one, mate.
Thank you.
All right, bye. Cool. Thanks for watching. See you next time.